Hello and welcome to the week ahead video. A couple of highlights to bring you over the next 5 trading sessions. Of course, on Wednesday we have the FOMC rate decision, where they are currently expected to keep their QE program on hold at purchases of $85 billion per month. Worth noting, there has been a lot of speculation heading into this Wednesday's announcement following the May 22nd testimony at the Fed Chairman Bernanke, where he did indicate that should the data points continue to improve, Federal Reserve could be coming closer and closer towards tapering that bond purchasing program. However, this has caused a lot of volatility over the last couple of weeks, with the likes of the Fed watcher John Hilsenrath saying this is not currently the intention of the Federal Reserve and they do remain committed to preserving market stability but still tapering QE in the medium to long term. So currently markets are pricing in a change at around September of this year. So of course a lot of focus will be on those growth forecasts, as if the Fed do maintain their confidence in the growth outlook in the US, could indicate they are coming closer and closer towards trimming those asset purchases. So this has taken a lot of focus over the last couple of weeks, with the likes of emerging markets seeing a lot of volatility as investors continue to remain concerned at possible capital outflows as that easy money from the Federal Reserve does slightly begin to dry up. However, elsewhere this week we have the Bank of England minutes also due on Wednesday, where we'll see how the board voted at their latest rate decision to keep their monetary policy programme on hold. This is Mervyn King's final minutes release at the helm of the Bank of England, where he's also expected to be heralded at the UK Chancellor Osborne's Mansion House speech, where they're likely to indicate how the UK government are going to react to their still high holdings of certain UK banks, with Lloyds Banking Group and Royal Bank of Scotland, to name just a few. Elsewhere this week, we're looking to see if there's going to be any sustained recovery in the Japanese asset classes as they continue to see very, very wild market fluctuations. They've begun the week on a pretty firm tone, closing up on Monday at around 2.73% for the Nikkei 225, with the yen resuming a slight weakening trend. However, data points due throughout this week will likely remain on the sidelines as focus remains on global central bank policy. So further digestion of how the BOJ board currently perceive their QE program continuing to remain within the spotlight. In terms of data releases this week, though, we have PMIs out of the Eurozone, which are likely to set the tone for the euro currency, which has remained somewhat of a reserve and safe haven currency, benefiting from the liquidation in emerging market positions as we continue to see weakening in the likes of the South Korean won, the South African ZAR and the Turkish lira amid the civil unrest in Taksim Square. So of course we'll bring you all those releases as soon as it hits the newswires and any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic week.